Cool. Um, so this will hopefully serve as an intro to part of my ES day trading slash scalping strategy. This is one aspect of the system that I use. If I am actively trading, day trading, scalping, I'll have what you're seeing now, the screen open in one window. Slightly complicated, but we'll break it down in terms of what's going on here. This is trading view, my trading view. This is the ES. I pretty much am only scalping the ES right now just because I've had good success with it. So plan on continuing. Um, by way of explanation, on the left, this is a point and figure chart, PnF. It's available in, I think, the first tier of paid trading view. It's a chart type you can set up. My configuration is box size is 2 and reversal amount is 5. What that means is every box, which is either an X or an O. It would be nice if they were customizable, but they're not. Every box represents 2 points in movement on the ES. So for instance, this little area here, we have 1, 2, 3, 4, 5 X's. Each X is 2, so this represents a movement of 10. The white X's are bullish rotations, and the blue circles are bearish rotations. So instead of, all of the candlestick price action that happened during this time, this chart is just showing me that, from the time this began, we had a rotation that went 10 points up in the ES. And then after that, we had a rotation that went 12 points down. It's not actually, it's like this type of chart should not be time-based. Just the way TradingView works and calculates and builds the charts, you have to put in a time frame. So I just have it set on 1 second, which is almost the same as not having a time base. Ideally, this would be based on ticks, but I think TradingView doesn't, or that's not in this particular paid tier, or it doesn't have that availability yet. So basically, the reversal amount is 5 reversal amount, which means that in order for a reversal to print, it has to have a movement of at least 5 to start. So on this chart, you'll notice that none of the reversal amounts are less than 5. Like 5 boxes is the smallest. If we went in here and changed it, we could go down to 3, and that would mean that it was now showing reversals that were 3. This can be useful, but also just creates a lot more noise. You'll notice this area is much more spread out. If we go back to 5, it's now this thing, which is condensed a lot more. So that's pretty much it. Instead of all the candlestick action, it's just counting bricks and putting them on top of each other. We get at least 5 going up, we print that, and then if we go more, we print, and then we get at least 5 down, we print a new down rotation, and we continue to print boxes for every 2 points that ES moves down. This type of chart, I got into this from Brian Watt, Mr. Yen. His stuff is hard to find now, but definitely worth it. He calls point and figure the king of all charts. The real advantage is there's a huge amount of data shown here, and it's very, very simplified and visually very easy to read. Just from looking at this, we can tell, this is a resistance up here. We have, some kind of support down here and down here. It's also good because, very quickly, you're able to judge how far price has traveled in a certain direction during this rotation. If all you were doing was trading using a point and figure chart, you could trade to where you were scaling in on rotations depending on the absolute value. So these ones on the screen right now are some of the biggest. This one is 52 points down, which is going to be 26 boxes. This one is 64, which is going to be 32 boxes. So you could have some kind of system where you just scaled in, after 20 boxes, you started fading the move, and you had some kind of scaling where, the farther the movement, the more you would put on, and then you would take it off on the reversal. It would be possible, slightly difficult to build a system just based on that. As it is, like times that we have a large movement, like I will look at scaling in, so I will look at playing from that side of things. In terms of indicators that we have here, down at the bottom, we've got the awesome oscillator, which is just like super good, super clean momentum indicator that gives us some info on what momentum is doing during this area of price action on the point and figure. There's other stuff I don't use, it's just still on there. And then the linear regression channel is what's shown up here. It's two. The first one is 1.5 standard deviations, and that's this first dotted line. If you go under indicators on TradingView, you can search for them. These are my settings: 200 length, 1.5 deviation, and then change the colors to what you see here. Basically what that means, if we just had the one on, the dotted lines on the outside would show price being 1.5 standard deviations away from the mean, which is represented by the line here. So, as more candles print and price changes, the slope of these lines will change. If we get like a big dump and then price starts going down here, the lines will shift over and, get less positive and then start getting negative and going down. Then adding on the second one, same thing, except the standard deviation is 2.4. Basically, like if price gets down into the area between these two standard deviations, like I'll look at scaling in. So if we get a large rotation and then price gets into kind of the key areas where it's pretty far away from the mean, those are signs that it's probably getting to be a good time to, fade the price action. Another thing, it's not super strong here, but the awesome oscillator will form divergences. You can kind of see through this area of price action, like we had a push up, awesome oscillator goes positive, we make a hill, we cool down, we push up again. And this one we get more positive. So it's a sign that momentum is still going strong. We get the cool off, awesome oscillator comes back down, and then we get another push in price. This high here is slightly higher. So, we made a higher high in price, but you can see that momentum slows down between these. So once you kind of know you're in this deviation zone, like whenever the bearish bars start printing, which tells you that the divergence is in play, you could start anytime there's a positive rotation, you could put some contracts on and scale in, because it's likely that there's going to be some kind of dump or some kind of price reversal for this divergence to play out, on which you can see, momentum continues to slow and then we get a crossover. So, somewhere in these movements with a crossover, you could say that the divergence is playing out. You could take some shorts and then cash out and take profit in here. It's not the cleanest. There's almost like a divergence going on here. And then between these two areas, you can see that there's a divergence in momentum, even though price action doesn't quite line up. But in practice, I was taking some longs here based on kind of the awesome oscillator pattern, showing that the bearish momentum was getting weak and momentum was probably turning around. So I was long going into this move here, which was quite a good move. That's the short run through of the point and figure chart. We'll hop over on the other side here. I have pretty much the same thing, except it's a Renko chart. Renko, again, is a different chart type. It's available in TradingView. Ideally, it is also not time-based, but the way TradingView paints it, you have to pick a certain time to check in. I do 3 minutes, which avoids a little bit of the noise that you would get going lower. So if you did 1 minute, you could see there's just like more noise and more movements that don't really mean anything in here. 3 minutes smooths that out a little bit. Not super pronounced. So on the Renko chart, I have almost exactly the same linear regression channels. The only difference is the length is 250. Just the nature of Renko, it is spread out more than the point and figure chart is. So I have the length on the linear regression a little bit longer. On the Renko chart itself, I have it set to traditional, and the box size is 2, which means that every box represents $2 in the 2 points in the ES. I've got the awesome oscillator again, and then RSI. This is a custom RSI indicator, but it's just default settings. And how do I use this? Fairly similar to the point and figure chart, it just gives another view. You could consider this to be like a lower time frame than the point and figure chart. If we compare the two side by side, this high here represents this high. This high on the point and figure is shown by this area on the Renko. So you can see that, all of this from this high down is, this whole portion of the chart. So it's definitely spread out more on the Renko side. Renko kind of gives you a window, a little bit finer detail into what's going on, while the point and figure chart is a bigger picture view. It's pretty similar how I will use Renko. So times that we get out into the edges of the linear regression, it's a good time to look at maybe getting into a reversal type of trade. The divergences are also super useful on Renko. Really, you don't need to use RSI. Awesome oscillator basically shows the same thing. I just like the RSI for confluence, I guess. Some of the really little like Renko movements, like up here, you can see we made a high, very slight retracement, and then higher high. And it made a divergence on the RSI, but that movement is too fine to be shown on the AO. So using the RSI gives you like a momentum glimpse based on very fine movements, a little bit finer than AO does. And as such, like I'll weight AO moves greater as like being greater strength because it's a bit zoomed out. A couple of good examples here, actually. This is from Friday, yesterday. We had this movement on Renko, which you can see we're pushing down into the lower bounds of this like standard deviation zone. So it's getting to be a good place to look for reversals. And then on RSI, we make a divergence between these 2 points and we get it on AO. So I was long here and I got like an pretty okay long scalp here. I ended up having to close some just because we didn't get a good push. I was hoping to get up towards the middle zone, but we didn't quite get there. The price action just ended up being too weak. I took that trade on Friday and I took some shorts up here just based on this, being quite a large rotation on the point and figure side. And like I said, I took some longs here. Super good trading day Friday. Using both of these systems definitely will give you an edge and give you a lot of trade opportunities you can take. This is pretty much what most of my trading will be based off of. The day trades and scalping I do on ES. So that was a bit of a, quick overview, quick primer. Probably will get a little bit more detail into both sides of what's going on here. And, plan on recording some trade examples and then what I do on the other chart type I use while I'm scalping, which is just a like 1 minute or very small range chart. But this is kind of the overview. Things I look for, like whenever I boot my charts up and I'm looking to see if I want to get involved in some scalps, I look at the point and figure side first. I see if, we've got divergences, how big the rotation is we're currently on. And then, if we're in the reversal zones where we're really far off of the mean. If any of those conditions are true and I want to take a trade, like I'll just take it based on the point and figure chart and I won't look at anything else. If they're not, then I'll look at Renko and, see if Renko is making some divergences or if it's in kind of the reversal areas, see how that lines up with what the point and figure chart tells me. Then if Renko is telling me some good stuff, I'll get involved in some trades there. If not, I'll hop over to the candlestick side. I'll just see what the real low time frame price action's doing and get involved in there or wait for something better to develop. But that's the basics of, how I structure my analysis and my scalping sessions. Hopefully this was helpful. Thanks for watching.